So let me share my screen real quick and share and start from the beginning. Oops. So good afternoon, everyone. I wanted to, first of all, thank everyone that took some time to join me today. We're going to be talking about VA home loans. And first thing I want to tell you a little bit about myself. My name is Kevin Schneck. I'm a mortgage loan originator based out of Harrisburg, Pennsylvania. I'm also a Marine Corps veteran. I served for 8 years in the active duty infantry. And I had the privilege of serving both pre 9/11 as well as post 9/11. So I really got to spend a good portion of my young adult life in uniform. So because of that, though, VA loans and veteran advocacy is extremely important to me, extremely personal to me. So one of the things I wanted to share was that VA loans were one of the main reasons I became a loan originator in the first place. See, my background was in insurance claims and data analytics. So when I was looking to potentially look for a career change, I had reached out to some friends of mine that I'd served in combat with, and they were both working as VA loan specialists, meaning that that's the only type of mortgage that they did. And what I quickly realized was that the customer experience that they had versus what I was experiencing was very different. You see, the analogy I like to use was working in insurance claims is a lot like working the lost luggage counter at an airport, right? Nobody comes to you if they're having a good day. Something bad's already happened. So you were already starting off in a rough space. And just hearing them describe how much just joy they received from being able to work with their fellow veterans and helping them achieve one of those life goals of owning a home was definitely something that spoke to me, and it was definitely a major factor in me making that career switch. The other thing too, coming into this industry, I know that there's a lot of VA loan specialists out there, but it was important to me that it wasn't just something that I said. Even being a veteran, I wanted to make sure to take the appropriate steps so that I knew whenever I was working with another veteran, I knew what I was talking about. And I also had the resources and knew exactly where to look something up if I had any questions. So what I'm going to do is just kind of, again, talk to you about some VA loans. If you have any questions, feel free to drop them into the chat or the Q&A section. And if we're not able to get to it during this session, you're going to have my contact information. Please feel free to reach out to me at any time. I'm always willing to help out another veteran, even if I'm not helping you out with that deal specifically. So one of the things is, if you want to work with the veteran community, Pennsylvania happens to be a great place to do so. You see, Pennsylvania is a home for the fourth largest veteran population in the United States. Some other things to think about too is that the United States military is the largest employer in America with over 3.1 million employees. And if you work with a customer or client that is a career military person, that's somebody that's going to potentially move every 2 to 5 years. So you're going to have not just the initial business, but you're also going to have repeat business down the line. And that's not even talking about the referrals you can get from having a happy customer. So Pennsylvania, again, just one of those great places if you are interested in working with veterans specifically. So during this presentation, what I think, I'm sure like a lot of you, I spent a lot of time online in social media, specifically in veteran groups. And I see two biggest topics of conversation. One is disability ratings. The other are VA home loans. And a lot of times what I'm doing is I'm reading through these comments and seeing a lot of misconceptions out there. So that's really where I kind of pulled some of these things that I'm going to talk about to you today. Just like my sister likes to tell me, data is the new bacon, right? Everything's better with bacon. Well, everything's better with a little bit of data. So I'm just going to share some data with you as I'm kind of going through this information. First, kind of highlighting, kind of what the misconception is, and then also just, highlighting some of the data around that. So one of the things I see a lot is that VA loans are actually denied at a high rate, or they're hard to get through underwriting. So if you look at the data, the chart that I have here, what you can actually see is that nationwide, VA loans are actually denied at a much lower rate. And if you look at the originations scores that are coming through, we're actually beating out FHA and VA loans consistently. Okay, so the fact that, this statement or this misconception that VA loans are denied at a higher rate or are harder to get approved is simply not true. The other thing I really wanted to highlight right here is this quote. Okay, this comes directly from the VA guidelines, right? And I don't typically like to read from a presentation, but I think this is really important. And it's that VA underwriters are encouraged to consider every possible appropriate factor in seeking a proper basis for approving home loan applications for every qualified veteran. You see, with the difference that we see with VA loans, most guidelines are going to tell you what you can do, what you're allowed to do in order to qualify that borrower. The VA takes that from the other side, and they simply tell you what you can't do. Now, what that means for you, or for me, it means that it gives you a lot more wiggle room for creativity, a lot more opportunity to get borrowers qualified that may not qualify for other loan programs. Now, from the lender's perspective, if you take a look at the portfolio performance, lenders want more VA loans because they have the lowest default rate of all the different loan products. This is another one that I
Kevin, you're muted.
All right, so I get.
Thank you. I accidentally hit the wrong button. But this is another thing I see a lot of, and that VA loans take forever to close, or that they take much longer to close. So the first thing I'd like to point you out is that those are the national averages. And if you see, the first thing I'd like to address is the idea that somehow VA is involved in the underwriting process. That's simply not true for 99% of all cases. Unless it's some extremely rare circumstance or special circumstance, they're not involved at all. And 99% of the lenders you're going to work with have automated underwriting authority. The other thing too, national averages, VA loans are closing within 5 days of the conventional loan. This is from application to clear to close. So like most people, I can get a little skeptical when it comes to data or statistics. So I reached out to one of our lenders that we use. This is UWM, who happens to be one of the largest lenders in the country. And I asked our account executive, hey, can you give me some statistics, or can you give me some data comparing your VA loans and your conventional loans? So if you can see here, it was 21 days on average during the month of August from application to clear to close, with over 6,000 plus sample size. And if you look at their conventional, again, the VA loans are performing within 3 calendar days of your conventional loans. So the idea that somehow VA loans are taking forever or taking much longer to close is simply not true. This one really gets to me. And this kind of goes to the whole idea of skin in the game, right? Somehow that because there's no down payment, there's no skin in the game, or somehow it's a weak borrower. So first thing, just taking a look at the profiles of your average VA borrower compared to your FHA borrower. This is simply, so again, this is just some data for you. Do with it what you will. But again, it's important to remember that when you sign up to serve in the military, to defend the Constitution from all enemies, foreign and domestic, this is just one of the benefits that you get. So the idea that there isn't skin in the game, or that somebody didn't take that oath and spend years of their life defending this country, that really gets under my skin. But this idea that somehow they're a weaker borrower because they aren't putting some sort of down payment down, it's simply not true. And that's not to say that a veteran couldn't put some money down either. Okay. I know this one's a tough one. This has to do with VA appraisals. So first things first, a VA loan is a government product, right? So it's guaranteed by the government. So their mission is to protect the veteran. So that's why they put out these minimum property requirements for the appraisals. But just like all, what they're looking for, is it safe? Is it sound? Is it sanitary? Basically for the benefit of the veteran, right? Are they moving into a home that's suitable for them to live? Okay. Some other things I'd like to point out too. So with VA appraisals, the VA actually mandates the turnaround time from when that's submitted to when it has to be returned. So the idea that this is going to take much longer than your conventional or your FHA appraisals, it's not true. The other thing to think about as well is the individual that's conducting the VA appraisal, he's just simply certified by the VA. But that's not his only line of business. That's the same appraiser that's going to be doing your conventional, your FHA, or your other appraisals out there. So again, it's not going. You have it mandated in terms of how quickly you'll get it turned around. But the real benefit with VA appraisals is that you have two different opportunities to challenge the valuation that's arrived by the appraiser. Those two processes are your Tidewater process and the reconsideration of value. And I'm going to get into that a little bit deeper in the next two slides. This first thing, with Tidewater. So Tidewater occurs actually prior to the valuation being submitted. So what happens is the appraiser gets the assignment, he's getting prepared to go out and do the inspection. And as he's looking at everything, he has a feeling that, hey, this is going to either be close or it's not going to come to the same value as the purchase price. So what happens is that appraiser then initiates Tidewater. There will be communication that's sent to the primary contact on the file. And at that point, you're going to have 48 hours, right? So everybody should be informed. And at that point, you're looking for comps that would help support that purchase price. So you're looking for up to 3 comps, but you really are on a tight time schedule to get those submitted and turned in. Once those comps are submitted, right? So once that deadline is passed, one of 3 things is going to happen. The appraiser has received the comps and he believes he can support the purchase price. He gets the comps and he can't support the purchase price, or no comps are received. But regardless of what happens next, he's going to finish his appraisal and submit the value to the lender. Okay. This is where then you have that extra tool at your disposal, is if that value still is not supporting the purchase price. Okay. And that's going to get us then into your reconsideration of value. So the reconsideration of value really gives you an opportunity to influence what the overall value of the home is going to come out at. It gives you an opportunity to look at any omissions that the appraiser may have forgotten. Maybe he added something or something within the appraisal is not correct. You can point those out. You can also submit comps at this time to help support the purchase price. But this process really does give you an opportunity then to send it back and really fight for the value of the purchase price. This is something that's obviously unique to VA home loans, and you're not going to see on any other loan product. Another common misconception that you will see a lot of times is this idea that, hey, I've already used my VA loan entitlement, or I'm already in a home and I've already used it up, or this idea that you can only have one VA loan at a time. So I don't want to get too deep into the weeds here, but with VA entitlement, every veteran that's eligible actually has 2 different sets of entitlement. You have your basic entitlement as well as your, it was the Blue Water Act that added this bonus entitlement. Okay. So there's a couple different ways you can do this. So if the veteran wants to keep that home and then purchase a second home, so maybe they're looking for, hey, maybe I'm going to turn this into rental property and then purchase a secondary, purchase a different home for my primary residence. You can do that one of a couple different ways. You can submit for a one-time reinstatement of entitlement. You can dive into your bonus entitlement if you haven't already used it. And this also applies to people that have been foreclosed in the past. As you can see in this example I have here, this is an individual that, they did have a foreclosure. What that foreclosure then does is it basically uses up their basic entitlement. That doesn't preclude them though from moving and using their bonus entitlement, as long as the purchase price for the home is over $144,001. right? So as long as the home that they're looking to purchase is above that price, they can use that bonus entitlement still. And there's a lot more leeway and a lot more flexibility, particularly in situations where you had somebody that has a foreclosure. So I know not too long ago, trying to get a VA loan accepted was like pulling teeth, right? VA just wasn't even being considered for a number of reasons. One of the things that I highly recommend, and this is for the buyer's agent and the lender to kind of team up together to really hit on the listing agent to kind of dispel some of these misconceptions. This is information that sometimes, you can accompany to that pre-approval letter with a separate letter. A lot of times I like to write it and just really highlight some of these benefits that veterans have using this VA product, right? So highlight the fact that, hey, this has easier underwriting, right? With little to no lender overlays. The idea that, dispel this idea that somehow zero down means that it's a weak borrower, right? Highlight the fact that you have multiple ways to address valuation if that's an issue. Okay. It's also, hey, we have the lowest default rates of all the loan products through VA. Lenders want to do more VA loans. And last but not least, this is truly one of the greatest ways to say thank you for your service. Working with a veteran to help to achieve that goal of purchasing a home. I truly believe, hey, you are going to have one of the best neighbors your neighbors are ever going to have, right? So really hit that home, address it when you're putting in your offer, but help be an advocate for that veteran, help kind of dispel some of these misconceptions, particularly with individuals that they're like, yeah, I did a VA loan back in '98 and it was a pain in the neck. Be like, hey, there's a lot of things that have changed. There's a lot of misconceptions that I'd love to address with you, just to help educate you, just to help make this process a little bit easier. I would, again, I want to thank you for your time. I apologize if I went through that a little quickly, had a lot of coffee today, but if you have any questions, if I can in any way help you with a veteran, I don't have to be part of the deal. Please feel free to use me as a resource. I'm always happy to help out. Oh, before I forget, one thing I did want to think, I was going to add this slide and then was a little bit worried about time, but pest inspections. Let me address this once and for all, hopefully. The seller does not have to pay for your termite or pest inspections. That is a complete myth, right? What it comes down to is that the lender cannot charge more than 1% of origination fees. So depending on the lender you're working with, you may or may not have to then transfer that cost over to the seller, but that is not required by the VA. So if you hear that, if you hear that myth or that misconception, make sure to correct them. There was a circular that went out this past June that just basically, again, clarified that issue and highlighted the fact that it does not, in fact, have to be the seller to pay that. So I hope you found this helpful. Thank you so much for your time. That's everything that I have. Thank you.